Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. Here is, despite that market was closed in a couple of sessions, still we have some changes that mostly support our idea that it seems that this action is not just retracement on the BC leg and that we should get some deeper ABCD type of retracement, but it seems that's indeed the continuation of this prediction. So some A point somehow has disappeared. So based on recent news that we have and we shared in actually our Telegram channel, you probably heard about the credit default spreads on the UBS. This has jumped right on Friday evening, increasing some really problems in liquidity with the big Switzerland bank. So it's might be really shock for the market, and right on the Monday morning we could see gold absolutely in a different place, because if UBS has the big problem, what we could tell about the other minor banks in Europe, we will see, but it's just one of the possible reasons. So also some geopolitical reasons exist. So what I would like to say is that it seems that this swing get more chances that become the upward continuation of this leg. And speaking about the targets on the next week, we're suggesting that it should be considered around 2055 area. First of all, because this is the COP of this upward swing, but also because this will become the daily overbought and yearly pivot resistance one. All this stuff stands right in this area, so we consider this as the nearest, or better to say maybe for the target of the next week, if of course gold will be able to break through the top. So that's what we will keep an eye on the next week. Maybe not only next week, maybe in the nearest few weeks, but this is the target that stands in a range that could be reached by the market on the daily chart. So this is not something theoretical, it stands very close. Besides, as gold will come closer to the previous top, which is actually around 1275, the activity of the traders will increase, as many will start increasing bet on the possible taking out of the stop. Stop hunting action will accelerate here, become more active, and it's usually market becomes more active when it comes from the long-term top. So this is just the first point on a possible way up. On the 4 time frame chart, we could suggest also a few local targets, which is the potentially might be the butterfly, the 2013, sorry guys, and 2020 targets. So 127, 1618 correspondingly. And in general speaking, on the trading setup that we discussed in the gold market, where we said that it's not quite natural for the bearish reversal performance on the hourly charts, take a look when the market just collapses here or starts upward direction. We said this is not typical for any hand shorts or something. So it's increasing chance that we will get upward direction. And at first glance, we have the Gartner's triple to sell, which actually based on the same swings at the butterfly on the 4 time frame chart. But take a look what we have. Don't be deceived with the CD leg right there. That's too slow. It's just because this is CFD and it due to the Thanksgiving holidays. But take a look what we've got on the Friday. So it's fast acceleration right to the OP. Besides, if we take the broader and wider view, you could see that we have the symmetrical triangle. That looks like the correspondingly as a pennant on the daily chart, on the 4 time frame chart, and it's potentially bullish. Here still we need to control this triple to sell pattern, and if we're really correct on anticipation of the possible upward action, market should not drop below the C point. It should not break the triangle in opposite direction. So that's actually our invalidation point for the short-term setup. So that's our comments to the technical picture. So we do not consider taking any short position here, and based on the news that we've got through the weekend, we suggest that gold even could open significantly higher on Monday. So that's what about the technical side. Speaking about fundamental background, as I think today we prepared a very interesting report, guys. I think you will get lots of really pleasure to read it. This time it was not it were not lots of the pictures in the report, but mostly the text. But this text relates to some special information that you will not find just in the media, and you will not hear it on just by the TV reports on the Bloomberg or some other news agency. So here's really some important things have happened, and the processes that we talked about in our weekly reports, speaking on the geopolitics, confrontation United States with China, involving on the Great Britain, and all these processes, and might accelerate significantly. So since this stands out of our control, I think that even those persons who start these big geopolitical tectonic events, I would say, even they do not know and what limits this could lead, could reach, and could go. So from that standpoint, our long-term view on the gold remains the same. As we said in the beginning of the year, when the market was around around 1650, 70 even, as now, we suggest that the potential of the gold rising is not over yet. And we think that it's the only asset, so cryptocurrency is up to you guys, but among the traditional assets, we still think that gold is the only asset currently that could preserve your wealth. We're speaking about the physical purchasing of the gold, bullions, coins, what you like more. Theoretically, you also could try to use the non-marginal trading on the exchanges, but you understand that this is just paper obligations. If you will be in a great profit or some force majeure will happen, nobody pays you, despite that it's exchange traded market or something. It's just announced and tell that this is force majeure, and that's all. That's why we're mostly speaking about the particular physical buying. So that's, I think, enough for me for today. See you next week. Bye bye.